all the CA aspirants. Our masterminds welcome you with all the good luck and wishing you the bright career and future. And this is Vasudha. I am going to deal with the economics for finance. First, let me introduce what are the topics that are being provided by our ICI board material and in which paper it is included. We can have the clarity regarding to this, and let's have a look here. Okay, this is the paper 8 of our CA Inter, Financial Management and Economics for Finance, and this paper has been divided into two parts, Section A and Section B. Section A is Financial Management for 60 marks and Section B is Economics for Finance for 40 marks. And according to our board material, they have given us 4 chapters. Okay. The first chapter is according to board material, that is ICA study material. We are having 4 chapters, that is determination of national income, right? The second one is public finance. The third one is money market, and the last one is international trade. Okay, you may get the clarity. We are having only 4 chapters according to our board material. The first one is determination of national income, which includes 2 units under this, that is macroeconomic aggregates and measurement of national income, and the second one is Keynesian theory of determination of national income. And the second chapter for us according to our board material is public finance. In that public finance, again we are having 4 units. The first unit is fiscal functions. The second one is market failure. The third one is government interventions to correct the market failure. And the last one is fiscal policy. The next one, the third chapter according to our board material is money market, which has been divided into 3 units once again. The first one is the concept of money demand. It includes the theories of demand. The second one is the concept of money supply, and the last one is monetary policy. The next one, the last chapter of this paper, economics for finance, is international trade. In this international trade, we are having 4 units, right? The first one is theories of international trade. The next one is trade policy. The next one is trade negotiations. The last but one is exchange rates and its economic effects. And the last one is international capital movements. Here we are going to discuss about foreign direct investments and the last part regarding to the foreign portfolio investments. Right. These are the 4 chapters that have been provided our board material. Right. And this chapter in our masterminds, we formulated in the different senses of their titles. Why we are saying like this means when you revise the board material and our chapters, you may get confused from which topics these have been dragged. So you have to know the titles especially. So we, for our convenience in teaching, at the same time for the convenience of students understanding sense and all, we formulated and we divided these 4 units into 11 chapters. So you might have understood, right? These 4 units we have divided into 11 chapters in our masterminds material, right? Let's go with the study material. In the study material, we are having public finance. Yes or no? In the public finance, we are having 4 chapters. That's it now? Right. The first chapter is fiscal function. That fiscal function is in our masterminds material, it is termed as fiscal function as it is. Right. The next we are having in the public finance, we are having the 4th chapter as fiscal policy. But we placed this unit as a 2nd chapter in the masterminds material. So in the public finance, the first unit has been placed as a 1st chapter in our masterminds material, right? The 4th unit of the 2nd chapter of study material, that is fiscal policy, has been placed as a fiscal policy, right? We are having only 2 more. That is, right, market failure. That is the 2nd unit of 2nd chapter, and the 3rd unit of 2nd chapter is government interventions to correct the market failure. We clubbed these 2 chapters and made into 1 chapter for the simplification and simple and easy understanding for the student's sake. So the 3rd chapter for us is, that is, market failure and government intervention to correct market failure. Hope children you might have understood. That is the 2nd chapter of public finance. Okay, We classified that chapter into 3 chapters in our masterminds material with the names fiscal function, fiscal policy, market failure and government intervention to correct the market failure. That's it. Right? The first chapter in our board material is determination of national income, which includes national income and the Keynesian theories. Right? And these 2 chapters we have titled in our masterminds in the form of the fourth chapter in as far as is national income accounting. That is, in the study material you are having macroeconomic aggregates and measurement of national income, but we titled this chapter in our masterminds material as national income accounting. So you might have understood. The next one, the determination of national income, we are having 2 units. The first one we had discussed right now. The second one is Keynesian theory of determination of national income. That's what we placed here as a 5th chapter, as it is the Keynesian theory of determination of national income. So hope we have completed two chapters of study material, and these 2 chapters we have classified into 5 chapters in our masterminds material. Over. And still we are having 2 more chapters according to our board material, that is money market, and the next one is international trade. In the money market we are having watch out children, in the money market the first topic for us is money demand, the concept of money demand, and the second unit in that is the concept of money supply. Supply and demand together known as market. Yes or no? The supply and demand of any topic together is known as market. In the same manner, money supply and money demand together is known as money market. So we combine those 2 chapters of money demand and money supply concepts as a single chapter in our board masterminds material as money markets. Hope so. That is over. This is the 6th chapter in our board masterminds material. The next one, monetary policy. As usual, we placed as a separate chapter even in our masterminds. The same title also we have dragged it. That is 7th chapter is monetary policy. That's it. The final chapter of our board material is international trade. In the international trade, they given us, they have provided with the 4 units, 5 units, but we made into only 4 units. We have not deleted any of the topic that has been provided by the board material or institute material. Just for our simplification sake, understanding sake, we change the titles itself. Okay, right. The first theories of international trade, as usual, we placed it as a theories of international trade as the 8th chapter in our masterminds material. The next one is trade policy. On the next one, third one is trade negotiations. We clubbed these 2 chapters, trade policy and trade negotiations. That's why 1 unit has been reduced here. So the 9th chapter according to our masterminds material is trade policy and trade negotiations. Those are the 2 units of 4th chapter of study material. And the last 2, as usual, we placed it and no separation of titles, whatever it may be. The last but one, exchange rate and its economic effects, we placed the same. And the last one is international capital movements. In this order, we are going to discuss, and I have given in what sense the titles of both material differs from masterminds material, and this has been just for the convenience in understanding. And many of the students may be having doubt why you change the order of teaching. Yes, for the students convenience understanding sake, first they have to know about the economy. To know about the economy in a full-fledged manner, we wantedly place the chapter of the public finance as the first 3 chapters of our masterminds material. It's just for the students convenient understanding and grasping levels, especially to get awareness according to the government policies or whatever it may be. It will be very easy for the students to understand. That's why we placed there and write. So you got the clarity, children. We are having totally 4 chapters according to our board material, and our paper weightage is 40 marks. We have to attend for the 40 marks, but our question paper will be given for 52 marks. Each question carries 10 marks and the last question carries 10. We will have additional questions with R. So totally 2 marks again it will be provided. 52 marks it will be provided, children. But many of the students used to ask, is there any possibility to skip any chapter? No, and not at all. Because while taking any question for them by them, they will each question, one question carries 4 questions. Okay, those 4 from different chapters they will take. So we can't say from which question they will take like that. So We can't assure you. It's totally possible to skip one chapter from the board material for the preparation sake. We can't even assure you. So, and many of the students used to ask us, ma'am, let me know the weightage of each chapter. So it's very simple. Each and every chapter weightage according to our board material is 12 marks. Chapter, not the units, okay? Each and every chapter weightage is 12 marks. Determination of national income, which includes national income accounting and Keynesian theory of determination of national income. Together we can get 12 marks. And the public finance, which includes fiscal function, fiscal policy, market failure and government intervention to correct market failure. And these 4 chapters are according to our masterminds material 3 chapters. Its weightage is 12 marks, absolutely. And the next one is money market. Money market and monetary policy according to masterminds material. So both together carries 12 marks. At the last time, international trade. In the international trade, whether it is theorems of international trade, trade policy and trade negotiations, and international capital movements. And the last one is exchange rate and its economic effects. All these 4 chapters together carries 12 marks. Okay, 48 marks. And we can't say from which chapter they may take additional 4 marks. We don't know, right? And the minimum weightage of each chapter is 12 marks. And this is the whole information regarding to this. 50 questions, 5 questions will be given. Each question carries 10 marks. You have to attempt only 4 questions. So absolutely one question is totally for the choice. Okay. So 4 questions you have to attempt and each carries 10 marks per each question. Per each chapter weightage is 12 marks. That's it. We have concluded regarding to this. And now I'm going to give the importance of economics for finance. And many of the students are having a normal doubt. In the sense, we can say that why economics for finance is it's just a scoring subject or a core subject. So though I say it's a core subject, nobody believes it, but we have to prove that it's a core subject. So to give you a small proof, we are here. There is economics for finance. And right now you came to know that we are going to study about the first topic is the first topic before you is fiscal. Public finance, that is nothing but a fiscal policy. That's it now. And the next one is according to money demand and money supply monetary policy. So we are giving importance to which policy? Monetary policy. And the last chapter, well, you can know about that international trade, theorems on international trade, trade policies, trade negotiations. All these comes under trade policy. Okay. And according to us, the first chapter of our board material is determination of national income with Keynesian theory of determination of national income. It is national income. We have to know one thing. For in each and every economy, whether it is a developed economy, developing economy, or an underdeveloped economy, or whether it is a capitalist economy, or socialist economy, or mixed economy, or whether it is a agro-based economy, or industrialized economy, or whatever the type of economy, in each and every economy, there will be in common 3 policies will be there. In common, there will be 3 policies is there. The first one is fiscal policy. It will be dealt by the government. The policies which are dealt by the government through their budget, we call them as fiscal policy. Right. It is mainly done with the central government and state governments. Okay. Right. Monetary policy. It will be done by a central bank of a particular country. In each and every country, there will be a central bank to issue the currency and to control many of the aspects like inflation, credit, investments, employment, whatever it may be, right? The central bank functions and the functions that are being carried by the central bank, we call it as monetary policy. In our country, the central bank is Reserve Bank of India, and the authority that is vested in the hands of Reserve Bank of India, we call it as monetary authority. And the policy that has been that will be implemented by the monetary authority is known as monetary policy. And the last one is trade policy. Right. The trade policy will be dealt by the Ministry of Industry and Commerce, which dealt only regarding to the international trade and their policies and all. Okay. Right, children. And many of you still be having doubt. Let the fiscal policy dealt by the government, let the monetary policy dealt by the Reserve Bank of India of our country, otherwise the central bank of a particular country, or the trade policy that will be dealt by any of the minister or any of the ministry of the particular country name. It differs from one country to another country regarding to their titles and all. Right. Ma'am, what are the necessity of these policies? I will tell you. The common burning problem. So I'm taking from the layman point of view, not the whole economics and the subject and all. I'm taking from the common man or layman point of view. Right. From the common man point of view, okay, right from the low income people, middle income people, high income people, the burning problem to one and all is inflation. Inflation. Yes, sir. It's a problem to all, to the households, to the farms, to the everyone. Each and every citizen of a country has to face this problem, that is inflation. Right? This problem, how it can be controlled? Many of you feels that when the prices will be hiked, it is the responsibility of central government or it is the responsible of state government. You feel so? No. Who has to control these inflation? These three: fiscal policy, monetary policy and trade policy. Let me give an example. If prices rises, what the government can do? Okay, take the examples, especially vegetables, fruits, cereals, crude oil, that is petrol and diesel. Many times these prices used to increase. Yes or no? Right. The protest may arise, may not arise. It depends upon the type of people who react towards or against the government or ruling party or whatever it may be. Right. If prices continuously increases, right, the government, okay, the government can fix, right, maximum price so that no seller should sell above the maximum price. The prices gets controlled. Otherwise, the government can provide subsidy to the people who cannot afford to purchase them. Cylinder. Yes, I know rich people, they can give up the subsidies, and the poor people, they can enjoy the subsidies because the prices are high. Yes, I know. Right. So the government can interfere to control the inflation by fixing the maximum prices or providing the subsidy or levying. Right. If the prices are high means the people requires more money and the demand is more. To reduce the demand, the government may levy high taxes or reduce the government expenditure. Whatever it may be, as per the requirement, it reacts. So to control the inflation in the economy, our government, whether the state government or central government, can fix the maximum price to a particular product or provide subsidy on a particular product. On the whole, if it wants to control the still inflation in the economy or surplus money that has been with the people, is what the government is going to do. It is very simple. It can go through its taxes and government expenditure as per the requirement, and these topics we are going to study in the chapter of fiscal policy. Okay, the next one. Ma'am, if there is an inflation, how the RBI can control? How the governor of RBI can control all this by sitting in the central bank? Yes, it can absolutely control. How it can control? Right. When the inflation arises, when the prices rises, when the prices will rises, when the demand arises, when the demand will increases, when the income is more, when will be the income is more? When there is more money supply with the people. Yes or no? When there is more money supply in the people, automatically what happens? Demand or aggregate demand increases. If demand increases, automatically the prices or inflation arises. To control this inflation, the Reserve Bank of India has to control money supply. How it can control the money supply? Through its different tools. Say, I can say interest rates. It will be commonly understood by you children. Interest rates. If government rises interest rates, what happens? The cost of borrowing, the cost of purchasing becomes high to all the common people. Automatically, they reduce their consumption. If they reduce their consumption, automatically aggregate demand decreases. If aggregate demand decreases, the prices get controlled, and the inflation, to what extent it has been raised, it can be controlled. So, hope you might have understood. So, it is the responsibility of the central government and also the central bank to control the inflation. It is not only in the hands of either the government, neither only in the hands of government, nor only in the hands of central bank. These two people has to work to control the inflation. Not only these two people, once again we are having one more policy here, that is trade policy. How can we control with the trade policy? It's very simple, children. Right. When there is a scarcity, when the prices will rise? When there is a scarcity. Yes or no? When the product is scarce in our country, automatically the prices of these goods and services will increases and thus high inflation increases. Yes or no? Right. When there is a scarcity in our country of a particular product, automatically what the government will do? The government will imports. The government will import. When the government will import, the supply increases, automatically the scarcity will decreases, automatically the prices gets controlled. Yes or no? Ma'am, when there is an excess, what happens? Right, children, when there is excess of crop or excess of goods and services, automatically abundance will be there. Abundance of supply will be there. Price falls. We call it as deflation. So, it is the responsibility of the government. It is the responsibility of the central bank. It is the responsibility of the trade policy to control either deflation or inflation. And thus, we want to bring price stability in the economy. That means to achieve the price stability, it is the responsibility of these three. It is Ministry of Industry and Commerce, at the same time central government, at the same time central bank. These three people get together, bring price stability in the economy. Ma'am, what is the necessity for the CA students? All these things, especially children, if you go with the concrete audits or stock audits or bank audits, whatever it may be. If you go with the bank audit particularly, yes, you have to know what are the right demand and time liabilities, what are they, and how it will be controlled, what is the level of CRR the government will impose, how it increases the money supply in the economy, how it reduces the money supply in the economy, how it goes with the open market operations. Right now in this corona situation, COVID-19 or corona, whatever it may be, in this situation, how the RBI is going to increase the money supply? Will it has to increase the money supply or reduce the money supply? Yes, it will be in your hands, children. Okay, as an economist, we tell you, yes, we have to increase the money supply or we have to decrease the money supply. But you as a CA, you have to say that percentage of increase or percentage of decrease are efficient percentage that can control the situation of an economy. Right? We just say the relation, but you have to say only percentage. If you know even the relation also, you will be the best person to control the economy in whatever may be the position. So this is the basic, not only for the bank. If you be in any government situation, or you may be the prime minister or chief minister of a state, or whatever may be in the government positions also, if you know the basics, how the government has to react according to the situations of economic conditions, yes, it will be more efficient, children. At the same time, the trade policy as a Ministry of Industry and Commerce, well, you can educate to what extent we have to import, to what extent we have to export, how we can overcome the trade deficit, how we have to bring the trade surplus, how we can achieve the balance, equilibrium balance of payments, all these things. You can have the basic knowledge so that any kind of audit can be done by you very efficiently in what, especially in the stock audits, you will be having different kinds of taxes like ad valorem duties, specific duties, countervailing duties, anti-dumping duties and all. Basically, you don't know the titles or headings or definitions, but you will be having here all the definitions and all, to what extent we have to levy these taxes, and that guidelines can be provided by you even as a right. Okay, hope ma'am, these three chapters, I'll give one example. Onion prices increases. It's not an inflation. Only one good price increases. It's not an inflation. But I will tell you with an example. I told you, no, onion prices are increasing. Okay, right. Government, what it is, it will go government. Government may provide subsidies, okay, to the poor people, or can fix the maximum prices so that this good will be available to all the people. Right, like that, it can take certain steps to control this. What the Reserve Bank of India can do in India, okay, ma'am, if onion prices increases, what the Reserve Bank of India will do? Yes, the Reserve Bank in India will do, right? If this good price increases, if it leads to other good prices also increases, if crude oil prices increases means cost of transportation increases, and this affects all the goods and services, that means it brings cost push inflation. The Reserve Bank of India watches it whether it leads to inflation of all other goods and services or not. If it considers it affects all other goods also, it will go for the decrease in money supply. Otherwise, it will not interfere. Okay? Right. What the trade policy can do, ma'am? You don't know, no? Right. What the trade policy can do? Trade policy, very simple. What the trade policy is going to do is, right, onion prices are scarce because of scarcity. So, our trade policy will go through imports. Not only imports, if any import tariffs will be there, it remove even import tariffs so that the product will be available at cheaper prices. So can you understand? Either a particular product or the whole market, whatever it may be, these three policies can do. Ma'am, okay, these three, okay, we accept with your words. So if we have the basics even at the audit times or any in the future, the personal career and all, it will be useful, you told. Right. These three we accept. What's the necessity of national income? Children, every country development depends upon their per capita incomes. Yes or no? Right. If the per capita income of a country is high, we call it as high income countries, or if they are at a low level, we call it as low income countries, or above the more level, we call it as middle income countries. Yes or no? Yes or no, children? So you have to know what is the importance of national income, right? What the national income that is revealed in the economy is right or wrong, still how we have to improve, do any methods has to be brought or not, all these informations we have to do. Yes, we brought recently in the year 2017, demonetization has been brought. Different is right from the political point of view, economist point of view, industrialist point of view, different people have different opinions regarding to demonetization. Black money has not came out from the politicians. Some people will argue, that what's faida with this or what's benefit with this for the common man, right? Some people argue that digitalization is much increased, so it's better. Like that. So different people has having different opinions, right? In the economics class, we are going to discuss what are the effects, the pros and cons of the demonetization, whatever it may be, whether in our countries like middle income countries, okay, our GDP per capita is in the medium level, right? So our national income, based on our national income, do monetization will show the positive effect or negative effect. All these terms will be discussed in the topic of national income. And what's the necessity of doing this national income? Can we compare our country with other countries with the same formulas and all? Yes or no, we are going to discuss. And that's it. This is the introduction topic for our subject. It is economics for finance. Once again, I am telling you children, this is the paper 8, section B, that is economics for finance. The paper 8 is financial management and economics for finance, which carries 100 marks. But financial management carries 60 marks. And our paper of section B, economics for finance, carries 40 marks. And in our question paper, we will have 52 marks, 5 questions, and one more additional question will be given, 52 marks. And each chapter, our total syllabus has been divided into 4 chapters according to board material, and each chapter carries 12 marks. That's it regarding to this introduction. So have the good day. Bye.